Yo, yo, yo. Hello, hello, YouTube. Okay, guys. Well, if you watched my last video, you guys deserve a goddamn blow. Yeah, you guys deserve a lot if you watch the whole thing. A lot of information in that. I want to go over what tomorrow is going to bring with the Fed Day, what I believe is going to happen, and what you're looking for what you believe in, whether you're a bull or you're a bear. Okay? Some very, very specific things that we want to look for. When the market SPY has pre-market highs and tops, it almost always breaks it, and they're usually inflection points, usually high probability. So like, for example, this was that, it broke the low, exploded up, broke the high, failed, right? It's just like a perfect example of it, right? Here, broke the high, rolled over, and then we stayed here. But we never dealt with the low. I was wondering, why didn't we come back down? Because it looked like it wanted to go down here, and it just didn't. It got this really wild move here. I think we're going to see that tomorrow. This is what I want to see, and I'll tell you why. I want to see us, I don't know where we're going to open or whatever, but I want to see a violent move higher on the Fed at 2 o'clock, and then I want to see it fail. I think we are bullish. I think we're going to have one of the most violent bull runs in history going into July. We're going to go through all-time highs. I think the sentiment is extremely bearish for many other reasons. In the hour-long video, I explain everything if you want to watch that. But we're so bearish that I feel like it's almost impossible for us to drop here. All the technicals, everything is set up for us to rally huge here. So if you take it just from the thesis of we are bullish, this is the setup and the play that I think is going to happen just for tomorrow, to give you more information or credibility for if it truly is that. I mean, I already believe it. I'm not going to be changing my positions unless it like breaks this and literally takes goes from 405 to 395 in like a gigantic red candle, not in like chop, just straight down. Then I'll be like, oh wait, something's going on here. This is not what I've been looking for, right? So what I'm looking for is 2 o'clock, massive spike higher. I don't know where it will be when it happens, but I want to see it violently sell off after that. And I'll tell you why. So I'm looking for it possible to spike up to go into the 9 SMA, which is around 420. Starting today, it's 420 right now. So I want to see a violent spike go into this 4212-ish or 420, something that spikes up into this, and you want to see it roll back over. Why is that? Because for one, it got rejected here, and it's the first resistance, so to speak, short term. So I'm looking for that to get hit, and I believe that we are so bearish we're bullish. That's what I believe. I believe the way it's set up is that we're so bearish it's bullish, and that this is a wave 5 or a corrective wave A, B, C, where B would go through all-time highs. Either way, it's so overextended and coiled that it's in a pattern where I think we're going to flash crash later in the year, so that you need the market to stabilize to the downside. You need the market to stabilize to the downside and hold the negative momentum. You would think that this would have been enough, but if this was enough, we would have rallied out today. If this was the last blow off bottom for the market to stabilize, we would have rallied out and closed at the high of the day. We didn't. So something's up. I think there'd be more volatility. So the thesis of how would it play out? You look at the different waves, and we have the low here as well as this move here. It's a very, very specific kind of move where you look at here where it exploded up and then it kind of settled right down into here and had this massive spike. When you have this kind of move where it looks like it fails and then it activates, this is usually an inflection point of sorts. It's like it kind of wanted to go lower, but it couldn't. It kind of like sits down like on a bench here. It's like it comes really tight and it gets really tight. That's an inflection point in my eyes. It's a very common type of thing that you would see, and it coincides pretty much perfectly with this. Right? And so you take this, this is something that you look for an inflection point. So then you take this, it'll be about 411.5 and 412. What's at this level? And then you go at the monthly on the S&P, and what do we have? 412.07. 412.07. So you go back, 412.07 is where? Oh, look at that, literally right in the middle. Right in the middle of both of them. So we're looking for the spike up into 420-ish, 421-ish, into the 9, into what I said earlier. I forgot it's late. You go up into it, fail, and basically crash down. So the bulls get excited, right? And then the bears get there. Haha, told you we were going to sell off. Haha, told you the Fed is going to crash the market. Ha, ha, ha. It's like final capitulation, reverse capitulation for the bears. It's like it completely solidifies their belief and that they will never sell their shorts. They will never sell their puts. And that's the type of the thing that you want to see right before the market rally to go, so that they stay bearish all the way up, even past 460, because that's where we fell before. And then past 460 is literally all-time highs. So they're going to stay bearish until all-time highs. And then you get the real capitulation to the upside. So why is that? Why does that matter? We talked about this in my video in pretty good depth about why it matters on a monthly basis that we hit the middle monthly Bollinger for the first time since the bottom of COVID, and we reacted extremely violently to it in April, and now we're right here. I think we're going to get an engulfing meta here, just like we did here. The wave cycles in the months where we talked about how the down move is not a down move and the up move is not an up move all the way since September. You go back in my video and watch this. I'm not going to talk about that again. It took too long. But you want to see if it happens. Look at the DMI right here. You want to see the negative DMI cross above the positive DMI at the bottom of the day. If we sell off, 16.9 is positive, 16.48 is the negative. And that represents one full wave cycle off of the vaccine news. Up, down. And if it rejects it, if we crash into it, which is represented by the monthly going negative at 412.07, it would represent that this negative DMI is going to cross and create a full wave cycle. But the fact that it did all of this, if it fails here, it's going to fail big. And we're already super bearish. Everyone is so bearish that this should be a capitulation. This should not be a continuation of the negative wave. It should be a capitulation of it. And then you should get the rejection of it. Meaning if you crash into 1407 at the open of the monthly, you should reject it. But then how would that look? You would crash into it, into the end of the day, and then you would gap up the next day on Thursday. That I've seen that plenty of times. I've seen that plenty of times in the history with the Fed and things like that. Also, the top of this move is where we did something like this. This was around 455, 458, where we spiked really violently. This was a very specific kind of move. We made a fact to talk about it on the stream when it happened. It was extremely violent, and when it got rejected, we said this is probably the top. This is, you need to be bearish until it breaks back above this, and it never did, because this is a very specific kind of move. I think this is what happens, but the opposite on Thursday is that we would gap up on Thursday, and then we have a very violent drop at the start of the day, and then we get the huge reversal at like 10 a.m. or something like that, and then we get the reverse. We get the gigantic rally out. That's what I want to see Thursday. If this doesn't happen, if we don't retest it, if we don't do this, then we're bullish, just straight bullish. It's easy. This is the hard play. This is the play that people who have been in the market for a while say, well, something's got to happen. It's never easy. There's always big volatility. Well, this is it. This is the higher probability of the big volatility that you would end up seeing. So they would recheck 420, and also it's because you saw if this is a fractal of this that I explained with the DMIs this month into this month, is that here it did virtually the same exact thing, is that it rechecked in October to the downside. If you look at October month right here, this was October 1st. So as soon as October started, it dropped and exploded up, and then we dropped, checked it once, checked it twice. And if you look through the way we are, you could see this where we spiked violently right here, and then we had kind of this rounded bottom, the drop, the pop, the gap down, and go. Right, so it's kind of like a double move off of this. Now take that, look at that. There's the drop, the spike. There's the drop, and the pop. So we're kind of in the same pattern. This is the violent spike, except this didn't happen This happened 2 days before the end of the month, but the pattern stays relatively the same, and it's the same because the monthly has the same wave cycle. This was one full wave cycle off the bottom here into here, and we explained it on the other video in terms of the monthly wave dynamic. So it's very specific, it's very important, and it's a pretty high probability play that I think that this would happen. And if it doesn't, and we just go straight up, yay, we go straight up. Easy peasy. I just don't think that would happen. And so this satisfies the bulls and the bears. The bears win, quote unquote. They solidify their position, and then the bulls get very scared and confused, and it makes the bulls think that any rally higher is luck. Oh, we're higher after the big Fed sell-off. Well, whatever. Probably going to sell off later, right? And then that's the mentality you want to see through the rally. Simple as that. Yeah, simple as that. Anything else? Final rally into the end of the week. Yeah, that's about it. I think that's about it. The VIX swell that happened here, double bottomed. Yeah, I think that's it. Okay, GG's. So look out for something like that. And oh yeah, UVXY. What am I doing? Surf. UVXY got rejected at this 200-day moving average pretty cleanly. And then I would expect something like it bounces off of this 150 moving average and reject it and then fail. If you know anything about it. So I'm looking for 1833-ish, which is a little bit above the pre-market high, which would coincide with that 411 area, 412 area on SPY. No, where is it? No, where is it? There it is. So this is the green line. This was the newsfeed price here on April 25th. This is an algo change. This triggered the market to go up. We bounced around it for literally all 4 days. We went up, we got rejected at the 200. And now we're on it again. And what we do, right when the VIX closed, it did it to the perfectly. As soon as the VIX closed right here at 1614, 2 minutes before, it basically touches it and then reacted with it. And then right before the ETFs closed, right at 8 p.m., again, it touched it and actually touched it, spiked and did this little dance here. I expect this to be a line in the sand, so to speak. Above it, market's bearish. Below it, market's bullish, violently. 1605. So something like the market violently pops below it when you're right near it on the Fed, and then it does one of these and closes up there. Or if it goes up and then just kind of reverses during the day. I don't think it does during the day, though. It gives everybody time to talk about it overnight. It's very important. So we'll see, but that's it. And then we'll look at those levels. And yeah, anything above this, again, is a danger zone. We got the 50 weekly at 20.33. We do not want to see that get hit anymore. We want this to be done with and over with and see the massive market rally here. This will go below $10. All right, and that's that. That's what I expect for the Fed. You can think what you want to think about being bullish, bearish, whatever. Below here, the weekly middle Bollinger at 15.4 is extremely bullish for the market, and above it means you're in correction territory. Simple as that. All right, good luck tomorrow. Good luck in the weeks and months to come. We'll probably make more videos. I'll make a video on the memes real quick because the memes are about to break out this next month or two. And all right, peace.